Good morning, everyone. In today's video, I'll be doing a live tape reading. So, just watching the markets this morning. Today is January 31st, 2025. And right now, I'm watching the Forex market, just monitoring euro dollar at this time. I went in short at about 8:33. Okay, and so I have my target right here set on London sell side right here. And I'll change this here. So these lows down here, this London sell side liquidity. So just speculate on intraday volatility. I normally don't trade Fridays. I've got a nice fair value gap right here. Right here. Sorry, I just annotating this fair value gap. I like to see it act as your classical resistance for price. Okay, so one other thing I want to note here. Okay, so this is panning out to be something very similar to the ICT 2022 mentorship model. Okay, so we have 8:30. We had our high impact news event driver. Okay. And before that, our important liquidity pools will be our London buy side, which is the high that was formed between 2 a.m. and 5 a.m. The highest high during that time period is right here. And then the lowest low is London sell side liquidity. So the low between 2 a.m. to 5 a.m., that low is down here. So we can see here where we swept. We had a minor sweep of buy side liquidity here. We came down and aggressively ran up into it here at the 8 o'clock hour, top of the 8 o'clock hour. And now I'd like to see us start to dump and target a London sell side liquidity. So that's my target. And I'm going to scale up to the 5-minute time frame. Seeing if it's necessary to move my stop up a bit. Give it some room to breathe. But you can see here we have a nice market maker sell model. So this is a intraday market maker sell model. And I'm going to drop out like to the daily just to, well, weekly and daily, do a full top down analysis as to how I am framing this position here because it's not the highest probability setup. It is a nice ICT 2022 mentorship model setup, and it works well within the framework of the higher time frame market maker model that I'm looking at here. But I'll go into that here now, and I actually don't like this crosshair for this demonstration for my cursor. I don't really want those crosshairs. I need to find a way to edit that out. It's kind of distracting. I'll just go back to the arrow for now. But I'll go into my full analysis here. So I'll go out to the weekly and just kind of let price action do what it's going to do. And I'm going to take a lot of this stuff off, take my drawings off. And let's go out to the monthly actually, because I have a much higher time frame bias. So my bias is based on a monthly, and very quickly here, well, not very quickly, but quickly enough, I'll go into a breakdown as to what my longer time frame bias is, or my higher time frame bias. So on a monthly basis, we have this imbalance here, and I guess I'll put this on now so the chart is not as cluttered. But here, the space between these two candles, that's a monthly buy side imbalance, sell side inefficiency. And we can see where price dipped down into that range of price. And we're currently working within this dealing range from this low down here to this high. So if we were to draw a fib on that, which I don't really have to do, once we get back down below 50% of that range from this low to this high, we get in discount. And so this buy side imbalance, sell side inefficiency on a monthly basis is in discount. And so what I'm looking for is for price to go higher, low hanging fruit, this monthly sell side imbalance, buy side inefficiency. So basically I'm looking for a price move from down here to up here. Okay, just very simple, straightforward. Now, its path towards getting there is going to require a lot of, back and forth, but generally speaking, that's what my monthly narrative is. Okay, that's what my bias is on a monthly basis. Now, I'll put my drawings on here temporarily, and you can see here this gray box here, and then this green box here. That's that dealing range I was talking about. So the gray area is premium, and then the green area is discount, and then this blue rectangle, that's the monthly buy side imbalance, sell side inefficiency. And we can see where price has dipped down below consequent encroachment, which is that black dash line of the monthly BISI. And then I just want to see price action continue to gravitate away from that monthly buy side imbalance, sell side inefficiency higher into this monthly sell side imbalance, buy side inefficiency. Okay, so next I drop down to my weekly time frame and take my drawings off. Okay, so right here we have this swing high, or this short-term high right here. This 3-candle formation, we have a short-term high, a higher high, and then a lower high. Forming this 3-candle formation, it's a short-term high right here. Price ran up above that short-term high. That's a market structure shift on a weekly basis. Okay. And so I'm interested to see how this week is going to close, to see if we're going to leave a weekly buy side imbalance, sell side inefficiency here, between this candle's high and our current week's low. Okay, if we do, then we could potentially see price dip back down further into that weekly inefficiency before springboarding higher. Okay, and so that's the weekly. Now dropping down to the daily. Now, for the purposes of aligning my time frames, we're keying off of a monthly level. So I like to see daily displacement above a short-term high to confirm my monthly bullish bias and narrative. Okay, so now we're on the daily time frame. So I go from the monthly, the daily confirms it, and then I use the weekly just to ensure that nothing funky is going on the daily. So the daily has had its market structure shift. Okay, so we have this short-term high right here. We have this short-term high right here. So we have an internal range short-term high, and then we have a more external short-term high right here. So we have two short-term highs that get ran here, and then we leave behind this daily buy side imbalance, sell side inefficiency. And so essentially what I'm waiting for now is to see how low price wants to go. We're breaking below this daily low right here now. And so that could be enough for price to want to go up higher. But we'll just have to see how news pans out, because what could happen is we could just come down even lower into what I'm looking at for today, which is this daily buy side imbalance, sell side inefficiency. So that's forming the basis for my intraday target. Now, from a higher time frame basis, what I'm looking for price to go from this monthly BISI, which is this big blue rectangle, to this monthly SIBI. But intraday, on the daily, we could just see a nice move further down lower. Okay, drawing into the daily BISI. Now we don't have to get all the way down there, but we have the daily BISI right here, or buy side imbalance, sell side efficiency, and then we also have our London sell side liquidity as the drawn liquidity. So we have multiple discount levels or liquidity pools where price could dip down into and go lower in order to go higher from a higher time frame on the monthly. Okay, so that's the daily. Now I'll go down to the 4 hour. So on a 4 hour time frame, we have this 4 hour sell side imbalance, buy side inefficiency in this range of price action from high to low. And we can see where price has rejected that inefficiency. And now it appears to be moving down lower. Okay, so I'm just riding that momentum. Okay, that's all I'm doing for today. So this is an intraday play. Today's Friday. I'm not expecting a whole lot of crazy price action. Now we did have high impact news at 8:30, which is why we're getting some movement now. But I'm not expecting a whole lot of craziness today. It's Friday, and I'm not pressing the button on any challenge accounts or funded accounts or any live real money. This is just a demo account. It's speculation. However, any position that I take on a demo account or an account where I'm just practicing and speculating, this is all based on real market data. Okay, so I'm I'm actually calling the market based on how the market is actually printing price real time. Okay, so 4 hour is bearish. And now my next aligned time frame from my monthly, daily, and then 1 hour. So from that higher time frame bias or narrative, okay, we drop down to the hourly. Now the hourly, you can see here, And I'm gonna go ahead and put these drawings on now. Hopefully it won't be too busy on the chart. And it's still kind of messy. I don't really care for that. But I'm gonna leave it on. But one other thing that I wanted to highlight, which my drawings reminded me of, we also have these daily relative equal highs here. So we can see here on Monday of this week, we came up higher and we didn't sweep this high here. So we created these relative equal highs, which I'm expecting for price to come back into sometime in the future. And all that, like me drawing that out, it's just further confluence for price action to want to reach up higher into this monthly sell side imbalance, buy side inefficiency up here, which is this large red rectangle. Okay. So now dropping back down to the 1 hour. And I could take this off now. Let's see here. Okay, so one of the price point that I like to put on the chart that I didn't put on here, I just was mindful of it without it being drawn out, was our New York midnight opening price for today. Okay, so the logic behind having that plotted on the chart is I like to see that power of three. So the three is the accumulation, manipulation, and distribution. And I'll put the arrow on. Okay, so that's our New York midnight opening price there. 0 o'clock. And we can see where price ran up higher. So that is effectively manipulating buyers to want to chase price. Okay, you see price rallying up higher. Like, oh yeah, let me get up on that. Nope. Price drops down, sells off aggressively, comes back up into, what do we have here? We have an hourly inefficiency right there. That's an hourly SIBI, H1 SIBI. Okay. Run up into that. And I also believe this is OTE. Yep, 62% OTE. So it's also optimal trade entry. So it's a lot of things that are lining up for this trade that I know I'm saying today is not the highest probability trade. But I mean, it's not my model, but when you go top down, so when I go from the monthly to the weekly to the daily to the 1 hour to the daily to the 4 hour to the 1 hour, like when I do all of that, and then I have this narrative for how I believe price is going to deliver, and then I have a pathway for how it could potentially deliver to my higher time frame objective. On the way towards that higher time frame objective, price is most likely to do certain things. So I don't always have to trade within my highest time frame narrative. My highest time frame narrative just gives me um it gives me the big picture, so to speak, the bigger view of what price is doing. Now, I could be wrong on this play. I mean, let's not, get ahead of I'm not going to get ahead of myself and just assume that I'm right on this play, but what I'm doing is top down analysis, and based on my top down analysis and what price action is currently doing, it's likely for price to reach down into London sell side liquidity. Okay, even though my higher time frame narrative is bullish. Okay, now this is I pretty much broke down this price action here on the 1 hour, but one other thing that I want to note here is that we also have this breaker. So this is essentially it's a 1 hour unicorn. That unicorn is where you get a breaker, you get a fair value gap. Okay, so we get our manipulation up higher, We drop down lower, okay, and then price runs back up higher. OTE, H1 Cibi up above New York midnight opening price. And I was talking about that accumulation right here at the open. So at around 0 o'clock, price accumulated. Then it manipulated up higher, drawing buyers in and trapping them on their longs. Then it sold off. So accumulation, manipulation, distribution. So we get our sell off. That's the distribution in London. And then we get our retracement later in London, pre New York Open. And now we got our news event driver at 8:30, which is either it's going to continue to do what it's been doing, which is selling off, or it's just going to reverse altogether. And because today's Friday, I'm not really expecting to reverse a profile, primarily because when we look at our daily schematic on how um, our range is formed on a weekly basis, day by day, we had Monday all the way up here creating a high. Then yesterday came up and swept Wednesday. So I just don't. And then, like, look at this here. This price action between Wednesday and Thursday. We have that huge wick up higher on Thursday and this huge wick down lower on Wednesday. And so this is like, I'm expecting this to be a immediate imbalance rebalance. Okay, so we can see where price ran up into more than half of this wick here. Okay, and this is also an old H4 buy side balance sell side efficiency, which, I'm expecting to act as an inversion fair value gap temporarily. But I'm just expecting for price to continue to sell off after it does that. So we've been getting we've predominantly been getting sell side delivery on this week. Okay, but the reason why I don't believe we're going to get, our classical um, retracement on Friday, where and I believe we already have. Let me put my tool on that. Yeah, so we've already sold off and sold up. Like we've came up into. So this is also an ICT concept where basically when price is predominantly producing one side of price, so either sell side delivery or buy side delivery in the current week, and in the most extreme cases is where Monday makes the high or the low of the week. Okay, and then Friday is at the opposing end. So if Monday made the high of the week, Friday is making the low of the week. That's what we have here. When that happens, price will generally retrace. So we're selling off, and we can expect price to retrace up into 20 to 30% of that current range. And we've already retraced up into over 25%. It might be about 30%. Let's put my 0.3 level on and almost 0.3, but I don't expect for price to get up into 0.3. I expect for price to keep selling off, albeit it might be a minor sell off. We could just get a seek and destroy. It wouldn't surprise me at all if we get that, or if we just consolidate. So let's drop back down to the hourly. We can see that hourly Cibi is still holding up. Let's drop down to the 15-minute now. Okay, so on the 15-minute, so this is interesting here. You can see this big green up close candle. And then we had this series of two large range down close candles, these two black candles here. And so what that makes the opening price of this 15-minute candle is a change in the state of delivery. So it's a negative CISD. That's change in the state of delivery. So what that means is that I'm expecting for price to, let's change this here. And extend this out further. Okay. So what I'm expecting for is for price to run back up into the opening price of that 15-minute candle and then start to sell off. So I'm expecting it to act as our classical resistance. Okay. So that's the change in state of delivery. So I'm expecting this to be an order block. All right. And we can see where price is generally is doing that. Right. So now let's drop down to the 5-minute. And you can see the wicks there. Wicks do the damage. The bodies tell the story. 5-minute. Just got this inversion fair value gap here. Repelling price lower. Market maker buy model. Market maker sell model. Right here. And I could draw that stuff out. I'll do it on the 1-minute. I believe the 1-minute is a much it's a crispier market maker sell model. I'll put this up here. So this was 126.25. So this was on Sunday where I drew, like, I pretty much typed up my higher time frame narrative, that monthly BISI to monthly SIBI that I was telling you guys about, and how I'm monitoring daily and 1-hour structure to confirm or negate that narrative. And yeah, I mean, it's been confirming it mostly. Okay, so that still stands to be true until I'm proven otherwise. But anyways, we have our original consolidation down here. Draw this out. Right there. Come up off of it a little bit, dip back down into it, sell up a little bit, come back down again. So this here, it's like this ranging kind of price action, ranging, and then we get another wave here. So all of this is like time distortion to me. All of this price action here. This here is where we get our next accumulation. To me, I mean, it doesn't have to be necessarily be perfect, but this is how I'm viewing it. Let's see. I'm gonna make these orange since I have that. And you guys will have to excuse me. I know my charts are very busy right now. Okay, so it's accumulation 1, accumulation 2, and then we're getting our smart money reversal up here. I'm sorry, consolidation. Accumulation 1 is this time distortion, and this is accumulation 2. I'm not going to draw that. That's just like time distortion to me. Okay, it's not a very clear accumulation. It's just price is just moving sideways. And I'll draw one out just for the sake of, you see how you can't really draw a good one. I mean, it's in the middle of the distortion. Okay, so I'm gonna just leave it there. But original consolidation, accumulation 1, accumulation 2, smart money reversal. So these market maker buy models are not always perfect. They don't always look picture perfect. I'll put it that way. I'll make this one red. I know, chart's messy. So let's zoom into this here. Okay, so right here in this smart money reversal. Right there. So what we have here, we have this short-term high this short-term low right there, and then it gets displaced. So that's right at the beginning of this, between 8 8:30. You get that displacement. Price comes up, so it leaves a fair value gap, and then it gets displaced again. So we have let's see, market structure shift. And then we have our low risk sell right here. Low risk short. Price creates another displacement. First stage distribution right here. And that's perfect. Price came right up to that. Oh man, this stuff is is like technical perfection. But yeah, one other thing to note here too is we get this short-term high, which gets swept up into this fair value gap. Then price runs lower again. So this here, this 8:30. Okay. So 8:30 is that high impact news event. And I'll put that on here. High impact news for US. Middle center. And change that orientation to make it vertical. And I'll make it on the bottom. So high impact news for the US at 8:30, and we can see that candle, what it did there. Then price ran all the way back up against it and wicked. Immediate imbalance rebalance right there. So that way when price created this, I'm not sure what I put right there, but oh, okay, it's that fair value gap. Let's see. So I'm actually going to make this black. Actually, no, I'll just draw a rectangle for it. It's going to be messy, but yeah. So this fair value gap here is what I was using. Um, but I had my stop up here. Okay, because I wasn't expecting for price to run back over this immediate imbalance rebalance. We can see here where price is getting nice and heavy. I may want to take 80% off. Oh, now see, you get that wick back. I'll move my stop to break even. I don't want to see it come all the way back. But yeah, initially I had my stop up here and I just moved it because of the subsequent delivery that we get in here. Again, my target is London. Let that be visible. London sell side liquidity. I'll put this right here so it could be seen. And yeah, so this is Friday speculation demo trading. So I'm not doing this with actual money. Mondays and Fridays tend to be my lowest probability days. And so I figured why not come on here on those days and do some tape reading and, push some buttons on a demo account. So yeah, that's what we're getting here. This fair value gap, like I said before, it got violated. But again, I had my stop up here because I wasn't expecting for price to come back up above this immediate rebalance. Okay. And now we're getting a nice sell-off. Now, one low I am going to take 80% off at is this low right here. Right there. And we're getting there too. I'll go ahead and put my buy limit in. Let's first figure out. Have to hurry up. There it is. I'll take off 200. I'll take off 2 mil. 3, 2, 3. Yeah, I'll take off 2 mil right here. Yeah. So I just took 2 mil off right there. And I'll just let the rest run. So we had this short-term low. And I also had 80% come off. Well, not really 80, but I took 2 mil off. I took partials. And now London sell side liquidity is my objective. And so I'll just wait to see that deliver here now.
And the God of all grace, who called you to his eternal glory in Christ, after you have suffered a little while, will himself restore you and make you strong, firm, and steadfast. Not only so, but we also glory in our sufferings, because we know that suffering produces perseverance, perseverance character, and character hope. Praise be to the God and Father of our Lord Jesus Christ, the Father of compassion and the God of all comfort, who comforts us in all our troubles, so that we can comfort those in any trouble with the comfort we ourselves receive from God. I consider that our present sufferings are not worth comparing with the glory that will be revealed in us. The righteous person may have many troubles, but the Lord delivers him from them all. For our light and momentary troubles are achieving for us an eternal glory that far outweighs them all. Who shall separate us from the love of Christ? Shall trouble or hardship or persecution or famine or nakedness or danger or sword? Therefore, since Christ suffered in his body, arm yourselves also with the same attitude, because whoever suffers in the body is done with sin. But even if you should suffer for what is right, you are blessed. Do not fear their threats. Do not be frightened. For it has been granted to you on behalf of Christ, not only to believe in him, but also to suffer for him. Carry each other's burdens, and in this way you will fulfill the law of Christ. He was despised and rejected by mankind, a man of suffering and familiar with pain. Like one from whom people hide their faces, he was despised, and we held him in low esteem. Whoever does not take up their cross and follow me is not worthy of me. Surely he took up our pain and bore our suffering, yet we considered him punished by God, stricken by him, and afflicted. I want to know Christ, yes, to know the power of his resurrection and participation in his sufferings, becoming like him in his death, To this you were called, because Christ suffered for you, leaving you an example that you should follow in his steps. For just as we share abundantly in the sufferings of Christ, so also our comfort abounds through Christ." At this Job got up and tore his robe and shaved his head. Then he fell to the ground in worship and said, "Naked I came from my mother's womb, and naked I will depart. The Lord gave, and the Lord has taken away. May the name of the Lord be praised. Whoever finds their life will lose it, and whoever loses their life for my sake will find it. He humbled you, causing you to hunger, and then feeding you with manna, which neither you nor your ancestors had known, to teach you that man does not live on bread alone, but on every word that comes from the mouth of the Lord." They stripped him and put a scarlet robe on him, and then twisted together a crown of thorns and set it on his head. They put a staff in his right hand. Then they knelt in front of him and mocked him. "Hail, King of the Jews," they said. "If I give all I possess to the poor and give over my body to hardship that I may boast, but do not have love, I gain nothing. Blessed is the one whom God corrects. So do not despise the discipline of the Almighty." In Hades, where he was in torment, he looked up and saw Abraham far away, with Lazarus by his side. So he called to him, "Father Abraham, have pity on me and send Lazarus to dip the tip of his finger in water and cool my tongue, because I am in agony in this fire." But God has helped me to this very day, so I stand here and testify to small and great alike. I am saying nothing beyond what the prophets and Moses said would happen, that the Messiah would suffer, and, as the first to rise from the dead, would bring the message of light to his own people and to the Gentiles.